Welcome to Currency Watch. This is Chris Keene from akeenpointofview.com. Most of the traders anticipated that the week was going to end rather slightly today, with most of the major players sitting on the sideline anticipating or waiting for the Greek election results on this weekend. But that appeared just to be the case, opposite of the case, as most of the majors moved up quite aggressively against the U.S. dollar heading into the end of the week. The major news this weekend is the Greek elections, and I don't have any idea, like similar to anybody else, of actually how the election results are going to pan out. But what I can tell you is that they are going to affect all the price action heading into next week and probably for the weeks after that. If we get a victory by the New Democracy Party, we could see a straight-up victory. We could see quite a bit of strength in the euro, and we could push back all the way up towards the 129 level initially, which is the 0.618 fib level. But now, if they lose the election and we get the other party to win, that would be a totally different case, and they win a majority also. We could see that there still be talk of a euro exit, but then we could also get central bank interventions to add liquidity to the markets that would boost the pairs also. And there's also the threat of further QE in the near term from the U.S. central banks, which has really added made the dollar weaker against most of the majors. So all I can say is heading into the weekend, if we get a positive result, we could see a gap up towards probably the 50 fib here at 127.84, and then we'd probably get a retracement, then move higher for the rest of the week. I can't tell you where we would stop, but I mean, a nice target would probably be this 0.618 fib level around 129. Now, if we have negative results, the pairs could gap down, and I don't know if we would have a continuation because I'm not really sure how the intervention would affect the currency pair. And would we just move up like we did last time, and then we rehashed all the gains within 24 hours? So basically, with this pairs, you're going to have to follow your price levels and keep your trades tight and keep your stops short. A next pair that's going to also be influenced by the same risk is the Great Britain pound. As you can see, the pound has skyrocketed higher into the end of the week here, probably a short squeeze as people are getting out of their positions prior to the weekend results. But we could see a gap up similar towards the 50 fib level, then a move down, then probably move back up higher. And if the results are bad, we could probably move down ultimately next week towards the 153.20 area. The next pair is the Aussie, and the Aussie and New Zealand are almost exact copies of one another. They're both trading just above the 50 fib retracement for last month. Depending on the results of the election and if there's risk on, risk off, we could see, if it turns out to be positive, we could see the beginning of the Aussie and New Zealand pairs moving up steadily, and we could, by the end of the month, retrace all of the losses from last month. So basically the context of this is to keep your eye on the results from the Greek elections and just try to play your levels that you have preset, and don't try to be a hero catching a falling knife. Look for pullbacks, and maybe you can re-enter in the direction of the momentum. That's Currency Watch. This is Chris Keene from A Keen Point of View. Have a great weekend.